Assalamu alaikum everyone, Fahad Siddiqui here, and I am so excited that we were able to catch Ibrahim Khan from Mr. IFG himself here at ISNA. Thank you so much for stopping by and joining us.
No, it's a pleasure. It's a great stall, and I'm
Right.
really excited to see this because it's we don't even have this in the UK.
There you go, Sharia-compliant life insurance. But before we get to the life insurance, you and I were just trading some bits about just general finance in general, right? So what I focus on as a financial advisor is just educating the American population. I don't want to say youth. I think a lot of the older generation needs it as well. And it's getting them the resources, getting them the education and where to go and how to do things, which I think your channel does amazing job in answering those questions and pointing, not just answering the questions, but pointing them where to actually go. So you're here in America now, you're on our land. If you were to give any advice to the American youth, what would you say?
The American youth, yeah?
Yeah, the American youth.
Yeah.
Different than the British youth. Where to go, where to begin, kind of how to start.
Yeah, so I'd say that, for everyone, it's really important to think about, where you are in your time of life and where you want to be in the next 5 to 10 years. And then really think back from that to where you are today and then build towards it. Because I think a lot of the time when we do investing or we do personal finance, it's almost like it's happening to us and we are not in control of it. And when that happens, then you end up with a complete pastiche, complete mixture of different things that actually, if you look at it, when you step back, it doesn't cohere at all. It doesn't work. It doesn't fit together properly. And then you're not going to be able to achieve your goals, right, as a result of that. So I think the very first thing I would say is figure out where you want to be and then, work back from that. And then the second thing I'd say is invest, especially early on in your career, invest in yourself, because that's probably the most highest ROI thing that you can do at that age. And people often, jump the gun and think about, let's invest in this and that and the other. But actually, in the first, let's say between the ages of 16 to 22, 23, I would say a big chunk of your money, savings, should be back into yourself.
Yeah. As we know with this generation that's coming up, even myself a little bit, timing-wise, you speak about timing, we want instant gratification, right? What do you say about balancing, hey, let's look 2 years or 3 years ahead versus 20, 30 years, right? That 20, 30 years, retirement, that's like a lifetime away. Are we ever going to make it there, right? What do you say about, hey, focus on the next 2 years, 3 years, and inshallah, step by step, we're going to get there. Don't get overwhelmed.
Yeah, I totally agree. And I would say that a lot of the time, to be honest, there's most people, once they take the first step and the second step, after that, I find that they're away. There's no issues after that. It's like when you learn driving. It can seem really overwhelming, but once you get into the car, into the parking lot, and you do a few rounds, actually this is all right. And then once you've done that, then you're actually ready ultimately to get onto highway and crack on. And I'd say the same is the case with managing your personal finances, where people are thinking, oh, I've saved up tens of thousands, hundreds of thousands, and I don't want to risk that. And what I often say to them, I'm interested to hear how you approach it, is that don't worry about investing all of it. Just invest 1,000 or 2,000 and just get into the habit, get that muscle memory going of what you should be doing. And then after that, you realize, what, this is not too scary, and this kind of makes sense. And then you just carry on.
So I keep harping on the younger generation, but we have this thing about lifestyle creep, right? And you brought it up about planning our own individual finances. How do you feel? What are your thoughts on debt, particularly consumer debt? Credit cards, spending, going out with friends, buying the flashy cars. Obviously, we're not talking about buying a home or paying for education, but just not digging our own selves in the hole by trying to keep up with the cons, I should say.
Well, so I drive a very old Toyota Prius, and I do that for a reason. It's because if you are investing your money into depreciating assets, and even worse, if you're investing your money into debt, which is literally a black hole,
Yeah.
then you're not going to get wealthy. And instead, if you think about, if you actually think back to the global financial crisis or back to COVID, after that, each time there's been a big bull run of stock market and real estate. Why is that? It's because, all of that spare money ended up going into these markets. But the other interesting thing of that is that the rich, the people who actually own these assets,
Yeah.
they disproportionately got a lot wealthier. Disproportionately. And why is that? It's because they own hard assets that actually appreciate in value over time. So a car doesn't appreciate in value over time. Taking out buy now, pay later, finance or consumer finance, and buying things that ultimately depreciate in value and use and get consumed and then go away. That's if you're doing too much of that, that's not saving your money. And instead, if you're taking that money and you're investing it into real estate, the stock market, potentially life insurance, income generating assets, that stuff will actually then build.
Aren't those things, you have to have a lot of money to get into those things, right?
Not necessarily. Not necessarily at all. I think these days, for Cur8 Capital, we're a UK-based firm, but we actually have about 15-20% of our investors are from the US.
Wow.
And North America. And you can start from as little as $5,000, and there's many other firms as well out here, such as the guys at Amana, and there's I think Azar. There's a whole bunch of these guys around, even in ISNA, and you can start from I think as low as $500, even $100, and so I think investments. There's a common misconception that it's inaccessible or it's for the elite, and that's really not the case. If you look hard enough, you can find stuff to get started.
I do, in my talks with our population, I do get the feeling that the East, even the UK, definitely, obviously, the Middle East and Asia, Islamic investing, Sharia-compliant investing is much more prevalent. You just mentioned it yourself. Americans here can also invest overseas. Of course, you want to do your due diligence, make sure the operators are trustworthy and have track record and all that stuff. But like you said, we live in a world now where the opportunities are there. We're no longer just locked by our geography, right?
Absolutely. And I think for Americans in particular, right now we are, like it or not, people like Ray Dalio really clearly articulate this. We're living through a cycle, an economic cycle, and America, which is the great superpower of today, is ultimately, I think, going to go into very serious competition, is already in serious competition with China and a lot of the emerging South, right? And so that means that America will always be very strong, I think, and will be for the next several centuries. But it also means that it's important to diversify across the currencies, across geographies, across asset classes. And so the time for when you could have American exceptionalism in investments, I think, is over. And actually, a lot of people, even in America, I don't know what you're finding, but a lot of Americans are thinking for the first time that, you know what, we actually need to diversify so that if there is turbulence in the dollar, then our investments, there's a smoothing effect that comes from investing in GBP, pound sterling, euro, or even in the Middle East.
Yeah.
And yeah, firms like us, we can help with that.
I'm going to touch on the word that you just brought up, turbulence. So switching gears a little bit, we've talked about earning income, investing it, growing it. What about protecting it? When you hear the words estate planning or legacy planning, what does that mean to you?
Yeah, it's absolutely vital. I think a lot of the time, I don't actually know what the tax system is like in the USA when it comes to estate planning. So I'm sure you can give some light on that. But a lot of the time, we work so hard during our life to earn that wealth, and we really look after it and we try and grow it. But if we don't necessarily make the right moves to think about what is going to be happening after our death, then we can very quickly fritter that capital away very, very quickly. And it seems almost counterintuitive that you're putting in all of that effort to earn it,
Right.
and you don't want to leak it away, for things that you can very easily put in place to protect against that. And I think it's wonderful that you've got Sharia compliant health insurance, life insurance, which, these are the kind of things that if you don't get right, if you have a life event that hits you, it can very quickly deplete your finances almost overnight.
Have you ever
Yeah.
heard of Sharia-compliant life insurance?
Well, we hear about it in the Middle East.
Right.
Unfortunately, we don't have anything in the UK,
Okay.
and certainly not. I wasn't aware of it in the US until I
Right.
came and saw you guys.
And what is your just natural instinct or intuition towards life insurance? Good, bad, for everybody, not for everybody?
Well, if I'm honest, because we've not really had to encounter it as often in the UK, I've not thought too deeply about the practicalities of it. I think in the UK the question is it halal or haram, right? And we're very comfortable that it's permissible. Like I know Sheikh Joe also says the same thing. I think if we think about it from first principles, the idea of protecting your family after you pass away and
Correct.
having that pot of money is super beneficial, particularly if you've got a mortgage, right? And you can allow, because you don't want a situation where if you pass away and you've still got a mortgage over your head and you are the sole bread earner, that you have a scenario where you end up losing the house because you can't keep up with your finances. So I think in situations like that, life insurance can be really interesting. I also think that the additional benefit of having investments that are baked into a life insurance product basically
whole
mean,
life.
exactly right. It basically means that you are earning and growing your wealth whilst at the same time getting the benefit of coverage as well.
Right. Because at the same time, what we definitely believe here is if you are going to go and take on that debt of that mortgage, of that car loan, of that student loan, then, that's your personal choice. If something were to happen to you, let's not pass that debt on to your loved ones.
Yeah.
Right?
Yeah.
As we all know, as Muslims, when we pass away, you want to clean your own slate. So that is definitely one of our beliefs here. And here at Ikhlas, again, I think we're the only ones who are doing this. Here in America, you're telling me you don't even have it in the Britain.
No.
So we need to talk to Sheikh Joe and to get over
Let's
there
do
too
it.
as
Let's
well,
do it,
right?
inshallah.
So I won't take up too much of your time. Thank you
No,
so
thank
much,
you.
Ibrahim. We've had a great time, and I look forward to seeing you again soon.
It's been a pleasure. Assalamu alaikum.
It's cool. I like this.
You like it, right?
It's a good idea.